Today's video is Introduction to Recording Depreciation. In our last video, we recorded the asset Equipment 021, E0021. It was a Toshiba laptop. We bought one of them, and we decided to depreciate it using the straight line method for 5 years, 20% a year. We paid $2,500 for it, and we have this thing set up so it's to start depreciation in the first period of 2013. The depreciation expense account of 903,205 is to be debited, and the balance sheet account of 209,205 is to be credited. For this asset, we have set up asset analysis dimensions. This is like the transaction dimensions, but these are fixed asset analysis dimensions. For example, what function is holding it, what location is holding it, what organizations are holding it, the who that has it, and so these are the asset analysis dimensions. And we also set up the asset posting presets, which said for the asset 100% of the depreciation is to go to Fund 20, to resource UFIN, this is a version 6 example, function the Treasury Department, the restriction 0. If you are in version 5.4, the UFIN would be the function. I think we're all set. Going to run the depreciation now for January of 2013 and see it going into the expense accounts and into this fund function and restriction over there. Okay, so let's get started with that and go over to our depreciation entry. We're going to run the depreciation using the asset depreciation calculation. I'm going to try to cover lots of these other things as well in other videos, but the ones that we've used so far is the asset records, the asset depreciation calculation we're learning right now. What we are going to do now in the video for our example is just do the depreciation on that one asset so you can see it working and build confidence in the automatic calculation. Then we're going to run depreciation for all the assets. On our depreciation calculation, these fields here and these fields here are all about filtering to get to just the assets you want to record the depreciation on. And we can run depreciation filtering on asset class. In our case, we want to filter on asset code, E0021. Okay, and we can even further filter by choosing one of the asset analysis dimensions like location or who's holding it. I showed you the asset analysis dimension just a second ago, and we could filter so we just depreciated one department if we wanted to. I don't see it coming up too much in Sun Plus, but we have that flexibility if we want it. The key here is we have to keep hitting OK. When I put that in, I went OK and it took me down to here, and I hit OK again and it took me down to there. 3 OKs, and we want to record the depreciation for January 1, 2013. Let's do it in the long form so you can really see it working. I want you to see what happens if we go no, then I will run it again and we'll go yes. Posting period is historic. I think most people will want this always to be historic, but let me explain what this does. You can either post it in the current accounting period, or you could post it in the period that was supposed to get the depreciation. So historic means put the depreciation in the period that it's supposed to be in. I think you say, well, yeah, of course, that's what we want. Or we could put everything in this current period. If you are very, very strict about closing the books out and you have another depreciation you've got to run, you might want it all in this period, I guess. I would never want that. I would always want my depreciation to be in the period the depreciation is supposed to be in. And then suppress transactions. Probably what you can do is suppress having every asset posted to depreciation expense. If we put no here, it's going to put an entry in depreciation expense for every asset every month. So if I shifted this to yes, the depreciation expense entry would not be broken down by assets. For most of the organizations that Sun Plus is operating in, there's no harm having the depreciation shown by asset and depreciation expense, and there's certainly a lot of advantages to it. This is a little bit of a tricky part here because these numbers are coming in by default. It makes no difference what these numbers say, but they have to be populated. That is, the instructions of what balance sheet account and what profit and loss account to be used is going to come from the asset register and not from here. I suppose if you had not put in instructions on the asset record of what accounts to use, I suppose that this would override it, but we're always going to do that. Okay, just to make sure you're clear on that, let's go over to asset record again. These instructions down down here on the asset record are overriding the instructions here on the depreciation page. So it doesn't matter much what you put in there, but it won't run if you don't have anything. This is asking, do we want to push together all of our entries as far as fund function restriction and asset record? And we're going to say no there. And so let's go ahead and go okay with this. And now remember, when we said post transactions, we said no. And let's look at what we get. And so I did okay, nothing happened. The SunPlus world often print is like the instruction run. So we go print. It takes us to this where we just want to view the report. We go okay. So it's reading the asset data. It took a second for it to come up. And so let's see what we have here, making two reports, and you see what it's done here. It has said that we want to depreciate. It's taken this information here for the asset, and it wants to make a depreciation entry for $41.67. $41.67. So let's see if it's calculating it right. So I just open up Excel here. All right, so we've got 2,500, and what we had said earlier is that we're going to take 20% a year, and so that is going to be $500 a year. Then it takes $500 and divide it by 12, and $41.67. So it is calculating it correctly. It is proposing to do a depreciation entry for $41.67, and it's giving this full report over what it's using as a basis for its calculation. By the way, this report would come up whether we did yes or no. So now let's just run it again and make our entry. Asset depreciation, and this is exactly what we just did. Asset code EO21. We don't want to filter by dimensions. We want to do this for 012013 post transactions, and we go yes. Posting period historic, put it in the period it belongs in. Suppress transactions no. This placeholders for the default that was set up in the asset register, okay. Keep okaying until we get down to this point here, and we click print. And this is the report view. Okay with that. We're getting several things at one time popping up here. First off, this report popped up exactly like what we got a few minutes ago, and then we've got a JV right here for $41.67, debiting depreciation expense and crediting allowance for depreciation, and you could see that it went to the proper fund function and restriction that we set up over in the preset. So that is supposed to be giving you a confidence of the fundamental way that it works and that it's doing its job. Our last little example was depreciating it for just 1 month, the very first month of his life. Now we fast forwarded from 2013, and we're now in the 6th period of 2014, and we're ready to record the depreciation for that period. And this is just the same process. We'll open up our depreciation function, and we want here to depreciate all of our assets. So we go A to ZZZZ, okay? We're not trying to filter and capture just certain assets by where they're located or who has them. So we could skip this part, and we're going to do the depreciation now for June of 2014. You haven't seen that we did run the depreciation for May of 2014, and now it's time to do June. And we want to go ahead and post the transactions, and we want to put the depreciation in the right period, and we're not going to suppress any transactions. And we have these accounts here, but they're irrelevant. The right accounts are being picked up from the asset register. So in this case, we're depreciating buildings and equipment and vehicles, and it looks very deceiving here as if it's going to go to these wrong accounts. This is the allowance for furniture and equipment, but it's not going to go to 209, 205. It's going to go to whatever we set up in the fixed asset record down here is what's going to govern it. And so we're good to go, and we go okay. We're not going to consolidate the profit and loss. Every entry goes on its own. We'll print. Not much to do here. We have that we just want to view it, not really print our report, and you see it's working. And we've got a couple reports coming up here. The first one that comes up is our asset report, and you can see it's going to tell us the depreciation on each of our assets. Here is our office building and the depreciation, the transaction of it being recorded, and the entry that it has made so far in the past and the entry that it wants to make this time right here. Okay, and here is our next building, and each of our assets are there, and this explains the calculation on every one of them. And we can go forward now to E021, our asset that we're interested in, and it's this Toshiba laptop, and you can see these are the entries that have been made so far and the period since we bought it to the period that we're recording now. We're doing June of 2014, and so these are the historical ones, and then this is the one that it's making with this entry. And so it's a nice little report. I'm not sure that you would need to print this after every depreciation run. It would be a little bit oppressive, but you could have it anytime you want it. And then this is the depreciation entry that it's making, the JV. It's a 10-page report. This is the allowance account is being made first, the credits, and let's see if we can't go through here to asset E021, the Toshiba laptop, depreciation expense going into the right place for $41.66. The label of the asset is right below it. Okay, asset E000211 is $41.66 right there. That's our laptop along with all of its brothers and sister assets. That is just the depreciation run, and we can come over now and look at our asset record for that asset E0021, and you can see that it is depreciated 750 so far. So we've run depreciation through 6 of 2014, and we started depreciation in the 1st of 2013, so it has been depreciated for 18 months. So what if we took this 18 months here equal this much a month? Might be a little bit of a rounding error, and there's 750. You see, so it has depreciated it out correctly. And we can come over to our Q&A where I like to pull all of my reports. Let's just do a little query looking at the depreciation on that asset. I'm gonna have a whole video on this, but it will give us something to get started with. So let's just do a summary report. The table is the ledger table. Account code, we could do the accumulated depreciation account. 209 is our accumulated depreciation. I can just look at all of 209 because I don't need that. And for the point right here, I want to see all the depreciation recorded on this asset. So I'm going to put 1844 001 to 2300 012, and I want to look at just that one asset, the 0021. So I'll come down here. It's sort of hard to see, but there it is right here. This is my asset register right under here. I'm going to take this up and put it there, okay, as a filter, and we'll have E0021 as the asset we're looking at. We go okay, and for my output I want to put out the accounting period and the base amount. We go okay, let's run it, and we can see my depreciation since we bought it. You can build all of your reports looking at the asset register using Q&A, and so I'll try to make a special video on that, but that just shows you that the depreciation is working just beautifully, even to the point that if it rounds a little bit different every time to get a calculation to turn out just right in a cumulative sense. So thank you for watching, and we will pick up our series on fixed assets with the next video. Make sure you stay tuned, and thank you very much.